When you think of borrowing money, a lot of times it comes from credit cards, it comes from personal loan, maybe getting an auto loan, maybe even a home. But there is one loan that you should never get and never consider, guys, that we're going to be looking at today, which is a payday loan. Now, payday loans, of course, have been the face or have been a target of predatory lending. There are actually a lot of states that they no longer do payday lending and high risk loans because they run on average a 391% APY. That is right, guys. You thought a 15%, you thought a 22, you thought a 30% was bad on a credit card. Payday lenders on average, again, 391%. The highest we have in the nation is the winning Texas, right around 600% for payday loans, guys. Now, it is kind of crazy when you look at the repayment phase. So payday loans are a very short-term loan with a very high interest rate. So essentially what you do is you give them a check or you give them a promise to pay within 14 days. The next time you get your paycheck, you pay back the loan and it is all set. You are done. That is it. You part ways. However, over 80% of Americans do not pay payday loans back within the 2 weeks. They actually do a repayment of that payday loan. Once the loan has been paid off, they reborrow that same amount and the endless cycle continues and starts right at that pivotal point, guys. The interest rates of these have soared, the amount that you owe, and you get caught in a cycle. It is a very, very vicious cycle looking at the payday lending. Again, credit cards run about 20-25%. Debt managed payment reprograms run about 10%. Personal loans about 8-15%. Other lenders 10-15%. So should this even be an option? Now, some states have really cracked down on this. Like I said, there are 12 states right now that have banned payday loans. There are 36 states that cap payday loans, and they cap not only the interest rate at a 36%, which is still incredibly, incredibly high, but they also cap the amount you can borrow. Now, some of these cap them at 300, some cap them at 500. However, there are still a majority of states that do offer payday loans with no cap. Now, it shows right here in Texas, interest can go as high as $662 for $300 borrow. So what does that mean in real numbers? If you pay it back in 2 weeks, so you borrow $300, in 2 weeks you pay back $370, guys. So not only do you pay back the original $300 that you borrowed, you pay back an extra $70 in a 2-week period on $300 that you borrowed. If it takes 5 months, it costs you over $1,000, which is absolutely insane looking at there. Now, payday loans, you also have to be careful, guys, because one, the reason a lot of people use them is they do not require credit to get these payday loans. So if you're going in there and you're looking for a payday loan, chances are they're going to give them to you, even though it is a high risk, it is a very high rate. Because of that, again, they do borrow to anyone who needs it. Now, one of the downsides to this, guys, is if you are not paying a payday loan or if you do not pay a payday loan back, it is going to affect your credit. So if you have poor credit already, now you have all these collections or negative payment history from payday advance places that is negatively impacting your credit score even further. So unlike lenders, where you put up collateral, which is a reason why a lot of places do collateralized loans, is you get a much better rate. Unlike that, the payday loans are just a promise to pay. There's nothing really that they can do in the short term to come after you. Legally, they can come after you, but again, it becomes incredibly expensive. If a debt collector, if a payday advance place is going and reaching out to you, trying to collect the money that you owe them, chances are there's going to be fees on there. There's going to be fines on there. There's going to be late fees on there. There are going to be a lot of additional things that you have to do. So how exactly do these loans work, guys? You come in, loan amounts vary usually from $50 to $1,000 depending on the state that you're in. If you're approved, usually within a day, you'll have the money deposited into your account. Full payment is due on the next payday, which is typically within 2 weeks, or they give you a 2-week window to actually repay this loan. Now, remember, these loans do run on a daily basis. So if you are, if you're just trying to float it 3 days till you get paid on Friday, chances are you'll have a much lower interest. But if you are floating it the entire 2 weeks, it is going to be very, very expensive. So what happens if you can't repay this loan, guys? This is it. So the average repayment, again, on that $300 loan is $370. When you look at that and when you look at finance charges, they charge some of them, and again, in the example that they use on incharge.org, $56 is the late fee, not including the finance charge that are charging you. And if it rolls over, there can be additional charges on top of the finance charges. This is where, again, the APY or the calculation gets just to that 600 plus range. So how payday loans charges are calculated, they charge it by day. A majority of these are day lenders or by day lenders. That is the way that they're getting away with it, which again, a lot of government entities are kind of cracking down on this. I know being in the service when I was in the military, they cracked down on all the payday loan advances that you were not allowed to borrow. And a lot of states have started doing the exact same. So what are some of these alternatives if you do need payday loans, guys? There are quite a few, like payday advances. Some companies will offer employees a payday advance, so they will actually pay you a little bit early. Again, some places do this, knowing your work history, knowing where you've been there. They can float you some of the money without the interest rate, which can be huge. Borrowing from your friends and family, this is often the very fastest and the very least expensive way, guys. If literally you just have to float money for a couple days because you have an unexpected emergency, if you have something going on personal, you can float the money for just a couple days with the ability to repay it, guys. That's one of my biggest pet peeve is know who you're borrowing your money to. You don't want to give it to friends and family, knowing their reputation or knowing that they're probably not going to pay you back. If that is the case, guys, the money that you're giving them, you might as well write it off as bad debt. You might as write it off as a check because it can not only affect the money that you have, but also the relationship you have with that individual. Credit counseling, there's a lot of nonprofits, depending on your situation, that offer free advice, set up budgeting, chip away at your debt. There's a lot of things that are government programs that assistant, even local programs that do credit counseling, similar to what we do at the credit union, which is completely free. Now, there's also debt management plans. Again, you can really make agreements to pay your debt off in a year, 2 years, 3 years, 5 years, whatever it may be. A lot of them are based on your income. So if you're having a struggling with the income and you're going to payday loan advances, you're borrowing money from a bunch of different places, chances are you could qualify for a lot of these programs that they do have. Now, local charities and churches hitting a bump in the road. They have a lot of organizations, the United Way, Salvation Army, a lot of churches, St. Vincent de Paul offer a lot of assistance, financial assistance for a lot of different people. Also, community banks and credit unions. Credit unions are a really good place, guys, where if you're in a tight situation, they have a lot of different options that you can do based on exactly what is going on in your life. Peer-to-peer lending is really the last one that we look at, where you might not see rates, that are in the 4, 5, 600%, but you could see higher rates in the 20s, the 30s, possibly even higher, depending on the peer-to-peer lending, which again, they know there's a little bit more risk, but there is a little bit more return. Now, payday loans, guys, are probably the worst debt cycle that you could ever get into. They are ultra expensive when it comes to lending. There is no loan that I know of in the country. I mean, short of probably a loan shark, which I don't even think they'll charge 600% at a loan shark to go ahead and get some short-term money to do with what you need. All right, guys, so that'll do it for today's video. Let me know in the comments if you've ever used these payday loans. And as always, thank you guys for watching.